Hi traders, this is David from Wave Trader. So I'm going to show you a trade I'm currently in, and it's a position trade actually on the New Zealand USD currency pair. So I'm on the daily chart right now, and you can see there's a lot of information here and a mess that I made with all my trend lines and stuff. So I'm just going to delete some of these things, okay, but leave out these trend lines and because I want to explain some things to you. So let's go to the monthly chart here. So on the monthly chart, this is what's going on right now, okay. For those of you who are still not used to the wave trader situation, don't be bothered by the fact that I don't have the indicators here, okay. All you have to do, if you want to review this chart for yourself after you watch the video, just plot your MACD and your EMAs, your 21 and your 5 EMAs, okay, and you'll be able to see it for yourself. But I believe that with training and with practice, a time will come you'll be able to see these things for yourself without indicators as well. So on the monthly chart, this is what I'm seeing, okay. The market is an uptrend, and you can see where I placed my profit target. Now this line that I drew here is the 62% of this rundown in price, and I'm just going to show that here, okay. The most recent or the last move down, you can see that this is the 62% region. So even though my profit target is way above that, this is the monthly chart. So worst case scenario, if the market gets to this area and decides to want to reverse, we can still make good profit from there. So on the monthly chart, let's just take it that the trend is up, okay. So let's go to the weekly chart. Now on the weekly chart, you can begin to see more definition. And on the weekly chart, this move here, okay, this is an incidence of positive divergence. Even without the indicators, you can see that. All right. So so we have positive divergence here, and positive divergence usually means that the market is going to give us a bullish situation. But if we were to look closer here, we have an incidence of a wave bottom. So that's we can use here as our number one, okay. And this red candle here, we can use it as our number two, and that gives us profit targets well into this region. You can see that my take profit region is just slightly above the third one, and this is because I'm looking at this area, because this is an area of it was support here and it's resistance here, so it's a good area from a position point of view, okay, to consider banking profits. So because this is a position trade, I'm not really in a hurry to close it anytime soon. Let's go to the daily chart. So on the daily chart, this is what's going on, and you can see that I entered, by estimation, I actually entered late, and I will explain why. But let me go lower to the 4-hour chart and explain why I entered late. Now you see what I drew here, and I wrote ascending triangle. Some of you are familiar with chart patterns, right? So in an ascending triangle in an uptrend, that means that the market is meant to go up. And on Sunday, today being Monday, so yesterday I was analyzing this chart, and I was able to see that we had an ascending triangle situation forming here, okay. As at the time I saw this, I believe the market was in this region. All right. So what happened here, the market was probably in this region, maybe here, okay. But then it was on a Sunday, okay, and the markets opened, for me the market opened by 11 p.m. at night. I didn't bother to look at my charts, okay, because I didn't expect this move to be so aggressive. So you can imagine my surprise when I finally looked at my charts this morning around 9 a.m. West African time, and the market had already started going so aggressively bullish. So I had no choice but to enter late, okay. But because this is a position trade, I am still on time. All right. So I'm going to go back to the daily chart now. So from the daily chart, you can see that I'm actually at the right place for an entry, and my stop loss is wide. It's about 56 pips, okay. But 56 pips to make 287 pips. It's a very good odd. Okay, it's a good odd for me. So our latest incidence of wave bottom situation is here, and even if we were to take our price targets there, it will still give us roughly the same area of price targets. So you can see that by using the most current wave bottom situation, my price targets are just slightly below where my take profit area is. Okay, so I'm just going to leave this trade as it is. I'm not going to disturb it. I'm just going to let it ride. It's a position trade, so this could take a couple of weeks, probably 2 weeks or more. But if I'm fortunate and the market is very strong, I might be done by Friday. So that's my take on the New Zealand USD currency pair. Thank you very much.